Welcome back to Tesla Daily News Podcast. Today is Monday, March 30th, 2026. We're tracking the biggest Tesla stories that could move the stock, demand signals heading into deliveries, competitive pressure from China, Tesla's autonomy narrative, and what's happening in charging and energy. Let's get into it. Story 1. The market is bracing for Tesla delivery numbers, and the macro backdrop is suddenly a lot noisier. Here's the hook. This week's delivery prints are landing right as markets are repricing inflation risk and energy costs. Context. Tesla is still valued like a growth and software platform company, but short-term stock reactions are often dominated by quarterly deliveries and margin expectations. When oil spikes, investor narratives can swing both ways, EV demand tailwind, but higher rates and risk-off markets can compress multiples. Details. A Wall Street week-ahead briefing flagged that investors are specifically watching Tesla and rival automakers as they publish monthly vehicle delivery statistics. At the same time, crude prices have surged amid ongoing conflict risk, which has weighed on broader equities and Magnificent Seven names, including Tesla. Impact. If deliveries disappoint into a risk-off tape, Tesla can get hit twice. The fundamentals headline plus multiple compression. But if deliveries stabilize or surprise to the upside, the market may lean into the EV's win when gasoline gets expensive narrative. Takeaway. For investors, the key is not just the delivery number, but the commentary around pricing, incentives, and mix. That's what will drive margin assumptions. Story 2. BYD's profit drop is a reminder that the EV price war is not over, and it matters for Tesla's global pricing power. Hook. Even the world's biggest EV rival is feeling the squeeze, and that tells you how brutal the competitive environment is. Context. Tesla investors have watched competition intensify, especially in China, where pricing and feature competition can force margin concessions. A weaker profit pool in the industry can lead to more aggressive price moves by all players. Details. BYD reported a 19% profit decline in 2025 to about 32.6 billion yuan, with gross margin falling to a three-year low around 17.7%. Its fourth quarter net income fell 38% to about 9.3 billion yuan, while revenue also missed estimates. BYD's chairman described the market as entering a knockout stage. Despite that, BYD sold about 4.6 million vehicles in 2025, including about 1.05 million exports, which was up roughly 140% year-over-year. Impact. For Tesla, two implications stand out. One, if BYD is calling it a knockout stage, pricing pressure can persist, which is negative for industry margins and supports a cautious view on Tesla automotive gross margin recovery. 2. BYD's export push raises the competitive bar in Europe and other markets where Tesla has relied on scale and brand. Takeaway. Watch Tesla's pricing discipline and regional inventory signals. In an environment where competitors are willing to sacrifice margin for share, Tesla's cost advantage and manufacturing efficiency become the differentiator. Story 3. Fast charging and battery architecture are becoming a headline battleground, and BYD just turned the dial up. Hook. The next consumer marketing war might be 5-minute charging, not 0 to 60. Context. Tesla's supercharger network and charging experience have been key advantages, but consumer expectations keep rising. Faster charging can reduce range anxiety and potentially increase EV adoption. Details. A Latvian technology roundup highlighted BYD demonstrating a system that can charge from 10% to 70% in about 5 minutes, using up to 1,500 kilowatts of power, far above typical 350 kilowatt fast chargers. BYD plans to roll out thousands of these chargers in China and Europe and pair them with stationary batteries to reduce grid stress. Impact. This doesn't instantly change Tesla's economics because deploying ultra-high power charging at scale requires major infrastructure upgrades. But it does affect perception. Investors should assume charging speed becomes more central to competitive positioning and could influence purchase decisions in high-density markets. Takeaway. Tesla's edge is still network reliability and integration. But the market is shifting from does charging work to how fast is it, and Tesla needs to keep pace on both hardware and software optimization. Story 4. Tesla's robot and automation narrative is getting a real competitor storyline, and Amazon is making moves. Hook. Amazon just bought a humanoid robotics startup, and the market is already asking, is this an Optimus threat? Context. Tesla bulls often treat Optimus as a major long-duration call option on Tesla's valuation. If credible competitors emerge, that could change the risk-adjusted upside investors assign to robotics. Details. Amazon acquired Fauna Robotics, a New York startup behind a bipedal robot called Sprout. It's described as a developer platform for social interaction, built on NVIDIA's Jetson Orin hardware, with about a 3-hour swappable battery and a reported price around $50,000 for research and development partners. The article argues Sprout is not designed for factory labor, while Tesla's Optimus is positioned as a labor robot, with Elon Musk saying production begins this summer and aiming for high volume by summer 2027. Impact. Near term, not a direct hit to Tesla's factory automation thesis. But strategically, Amazon's distribution and in-home ecosystem could shape a different market, consumer and home robotics. If that category takes off, it could attract capital and talent and create narrative competition for Tesla's physical AI story. Takeaway. Tesla investors should track concrete milestones, production timelines, unit economics, and real factory deployments of Optimus. Narratives matter, but execution will decide valuation. Story 5. Real-world autonomy is scaling, and the pressure on Tesla's Robotaxi narrative is increasing. Hook. Waymo is now doing about 500,000 paid Robotaxi rides per week, and scale is exposing operational headaches. Context. Tesla's autonomy story is a major driver of its multiple. When competitors show tangible scale, investors compare timelines and safety performance, not just demos. Details. TechCrunch reports Waymo's paid ride volume has reached 500,000 per week. But as fleets scale, incidents where robotaxis get stuck have required intervention by first responders in multiple cases. The broader point, robotaxi operations can create hidden costs and regulatory scrutiny. Impact. For Tesla, this cuts both ways. On one hand, it shows the robotaxi business is real and growing, which validates the category. On the other hand, it highlights that scaling autonomy is as much operations, support, and regulatory management as it is software. Takeaway. Investors should watch not only Tesla's autonomy capability claims, but also its planned operational model, remote assistance, support staffing, and how it handles edge cases. Profitability will depend on that layer. Story 6. Tesla's charging ecosystem remains strategically valuable, and expansion isn't just about Tesla drivers anymore. Hook. Europe's ultra-fast charging build-out is still running into bureaucracy, and Tesla is part of the industry push. Context. Charging availability and uptime influence EV adoption rates and can support Tesla's ecosystem advantage, including potential network revenue. Details. In Spain, a newly formed association of ultra-fast charging operators, including Tesla among its founders, is calling out permitting delays that can stretch to about 2 years to bring a site online. The group is pushing for broader use of streamlined approvals and better visibility into medium-voltage grid capacity to speed interconnections. Impact. Faster deployment improves EV adoption and can indirectly support Tesla demand. But delays also slow monetization of charging assets and reduce the pace at which infrastructure can keep up with rising EV sales. Takeaway. For Tesla watchers, track policy moves that shorten permitting timelines and improve grid transparency. These are boring, but they have real adoption and revenue implications. Story 7. Tesla demand in Europe is getting more mixed, and Turkey is emerging as a bright spot narrative. Hook. Germany is soft for Tesla's Model Y in the charts, but Tesla is pointing to pockets of strength abroad. Context. Europe matters for Tesla's volume and for the Berlin factory's utilization. If demand weakens in core markets, Tesla may lean harder on pricing, exports, or new growth regions. Details. A German report noted that the Model Y in 2025 was no longer among the top 10 best-selling EVs in Germany and highlighted Turkey as a hope market for Tesla in 2025. Impact. If German demand stays weak, investors may question European growth and factory leverage, which can pressure margin expectations. Offsetting growth in markets like Turkey helps, but typically at different pricing and competitive dynamics. Takeaway. Watch registration trends across Europe and Tesla's pricing moves. The big question is whether Tesla can maintain mix and margin while defending share. Let's wrap it up. Today's big themes were deliveries as the near-term catalyst, intensifying price competition led by China, charging speed and infrastructure becoming a new battleground, and the autonomy and robotics narratives facing both validation and competition. For tomorrow, keep your eyes on any early delivery leaks, official delivery reports, and any pricing or incentive changes that hint at margin direction. If you got value from this, subscribe to Tesla Daily News Podcast and follow us for your daily, stock-focused Tesla Roundup.